All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussions and what Derrick is currently doing in the market, we'll take a look at what he is currently trading as of our recording here today on August 18th. 2025, and he is the head trader at T3 Trading Group. So just taking a look at his positions for disclosure purposes. All right, Derrick, we are getting a pro trader market update here. Happy Monday. How is your Monday going so far?
So far so good. It's been pretty quiet. We had a few good trades, a few good call outs off the open this morning, but the indexes have just been sloppy without much to speak of. So, up some money. I wish I was up more, but I'm happy I'm up at all. So so it was good.
All right. Yes. Any amount of in the green is a good day for sure.
Green is
All
good.
right. Let's talk about like you mentioned, the indices are a little bit sloppy. Not a lot of kind of direction, I think, for the week yet, because a lot of the stuff that the market is focused on isn't coming yet and isn't coming till like really late in the week. We're going to get some Fed minutes on Wednesday. The official start date of the Jackson Hole Symposium for the Fed is Thursday. It's 21st through the 23rd. The big thing, though, for Jackson Hole is the Friday speech by Fed Chair Jerome Powell. So we're not getting any of that Fed stuff till the latter half of the week. There's also some retail earnings this week that are really important. So we'll talk about those too. But let's talk about the Fed first. We're coming into this week with the background of the CPI and PPI release last week, plus retail sales. CPI cooler than expected, PPI hotter than expected, which is signal for maybe a hot CPI in the future. So when you look at the market here on a Monday, after we got those two data points last week, how are you feeling about the direction of the market and how the market is feeling about inflation and what it means for the Fed?
Sure. So I would argue that the CPI was pretty in line, and an inline CPI still indicates that there is now an increase in inflation. So inflation is moving up. We are slowly starting to see the impact of tariffs in the inflation numbers. And the fact that it wasn't a disaster, though, the CPI number, it was more or less an inline number, and I think there were some whisper numbers out there that were significantly worse. Everybody was talking about, like, we just had the signs of a growth slowdown with the non-farm payrolls number being so quick. Oh my God, could you imagine if we get a really, really hot CPI? So the good market went into that CPI pretty fearful. And the fact that the number was in line, even though inflation is ticking up and it wasn't a disaster, sometimes just getting through an event without it being the end of the world is enough to trigger a little bit of a relief rally higher in the market. It's pretty much exactly what happened into the CPI day on that Wednesday, August 12th. We were still a little bit below all-time highs from when we had a little bit of pullback on July 31st. Maybe I can get the screen share going here for everybody real quick,
Yeah,
Greta,
definitely.
and then let me pull it up over here. Share screen, entire screen number one. Okay, cool.
All right.
Um, so basically what I'm talking about here is this is the CPI day of Wednesday of last week, and this was a major breakout, even though it was an inline number and inflation is ticking higher. It was a major breakout because we got above the key high from July 31st. That July 31st high was really important because it was a negative Maribozu engulfing candle. Then Friday we had follow through. That was the day of the non-farm payrolls number. The non-farm payrolls number came out really weak, but then the market bought that back up. Why did the market buy that back up? Because they're saying, like, all right, the non-farm payrolls number's not looking good here, but guess what that means? It means that the Fed has room to cut. And then into CPI, it was, well, the Fed has room to cut as long as inflation isn't going crazy. So this CPI, again, was so important, and we did see an uptick in inflation. The number was in line, but the inline number was enough to give a relief rally here because it wasn't a disaster, and everyone said, like, all right, Fed can cut, Fed can cut. And we reached higher, the new all-time highs. It was a beautiful breakout. Then we dojied on Thursday, a little bit of follow through, but kind of a doji. And then on I guess that was on was it Friday we had no, it was Thursday that we had the PPI. Hold on. Just got my days here a little bit mixed up. I don't think it was
I
a
think it was
CPI.
Tuesday
Yeah,
CPI and Thursday PPI. Yeah.
Tuesday's CPI. So that's where I got that from. And then the
Yeah.
PPI came out on Thursday, and that number was a disaster. That number was
Mhm.
like really, really bad. It was really hot. Like CPI was showing an uptick in inflation, but PPI came out like really, really hot. Now, the silver lining on there was that the components of the PPI that translate into a hotter PCE were not actually a disaster. But overall, compared to expectations, that PPI was kind of a nightmare. And we're starting to pretty consistently see signs of stagflation in the economic numbers now over the course of the last few weeks. And I really never want to jump to conclusions on stagflation because I've been hearing people chatter about the potential of stagflation for years and years and years in the entirety of my career. But I would say this is the first time that we're starting to see some aspects of it. You're seeing a growth slowdown with the beginnings of a pickup in inflation. CPI not the end of the world, but a bit of an uptick. PPI, which could translate into an even hotter CPI in the future, was really nasty. Yet the indexes here have not been able to really break down. And I circle back to the importance of understanding market structure. We're in a hugely positive gamma environment. I saw on Friday before OPEX, so OPEX usually rolls some of this off, positive 2.9 positive 9.5 billion dollars worth of positive gamma. So that positive gamma just means when the market tries to sell down, it runs into massive forced buying from the options dealers and market makers that are rehedging themselves by buying the S&P. And the market actually ended up being relatively fine on Thursday. But underneath the surface of this market, there's some interesting things that are ongoing with some stocks that have been the major leaders of this market that have been weakening out a little bit. Some of them, a couple of them now, have lost some major support levels. Others are managing to still really hold on to them, but aren't continuing either. One is Palantir. Palantir lost 180, which is an important support level. An even more important one is like the 169 to 171 zone that it's nearing now. But this has been obviously one of the biggest darlings of the market. It's the top performer, I think, in the S&P of the entire calendar year so far, and that has started to weaken out a little bit. We saw AMD give a breakout through 180, but then kind of fail off of that a little bit. Today, we're seeing Microsoft potentially lose 520 area, which has been a really important support level. And Microsoft, that earnings report was phenomenal, but this stock has not been trading well. Every move higher over the course of the last 6 trading sessions has just been met with selling. That's why you see all these little upside tails here. And on the only green bar on the daily candle here on the daily chart in recent memory, the next day was immediately met with more selling. I actually shorted Microsoft this morning as a new trade today. Um, the one that is probably the most important name though that this market has not lost is Nvidia. Nvidia, this like 179, 180 area. I know on Friday it traded as low as 178 briefly before again kind of recapturing the level intraday, is just so important for this market. So where we're at right now is, and even Nvidia, before I change the subject, it hasn't continued, right? Like the spies we just showed on Tuesday with the CPI had a massive breakout day, but Nvidia still it hasn't continued. So it's a leader, obviously the most important leader in the market, and hasn't broken down and lost support like a few of the other stocks I just mentioned, but it hasn't been able to continue either. So some of these leaders are slowing down a little bit. The indexes have not yet lost any support. And that's probably the most important thing, especially as now we get through OPEX. So OPEX was on Friday. We have Vixpiration on Wednesday, which is also important. Getting through Vixpiration can also loosen the market up a little bit. But now that we're through OPEX, you have the potential of this market being able to move a little bit more clean. Granted, with all that said, we're in the middle of August when things tend to be slower. And there is one other really important market dynamic that has to be mentioned right now, which is corporate buybacks. Corporations are going to be the number one buyer of stocks this year. They're going to be the number one buyer of stocks in August. They're set to buy $1.1 trillion worth of stock in 2025. And the biggest month of the entire year for those buybacks is August. And right now we're fully in the open window. Really between now and the end of the month is probably like the biggest couple week period for corporate buybacks of the entire calendar year. They're expected to buy between $5 and $6 billion worth of stock per day. So there is still a really important supportive structure to this market that's creating a lot of dispersion, where now we're losing the leaders a little bit, but other names, like IWM names, the Russell got so much better. A lot of value has gotten a lot better. We saw the UNH announcement on Friday, where Warren Buffett and Renaissance and a whole bunch of really, really smart fund managers came in, and they're buying value. And the next thing you know, it seems like market participants are trying to follow through, and they're selling down a little bit on these expensive AI leaders, and they're starting to buy up some of these value names with continued rotation as the market holds in sideways. But this market, the last thing I'll say is that this market feels different to me now. It feels heavier. It feels, dare I say, a little bit toppy. But this is what I keep telling everybody on the team. It's like I'm looking at us losing some of these leaders, but the SPYs, the Qs, they have not lost a single support level yet. Let the market be your guide. Let the price action pay you. Let's watch and know our key support levels. Level number 1 for the SPYs is 640 on the downside. Level 2 is 636. Those are really important. And we can see if we lose those levels, what it actually turns into.
All right. I want to talk about some of the earnings that are coming this week. First up would be PANW, Palo Alto Networks, tonight after the market close. Do you have any thoughts on Palo Alto before we move on to the retail sector?
It's an incredible company. I don't really trade it. I don't know why I don't trade it. It's an incredible company. This stock broke. A lot of the cybersecurity software names have kind of broken recently as well. Again, phenomenal company. I don't follow it as closely as I should, so I don't really know what happened here on this big sell down day here on the 29th that was followed by a gap down on the 30th. But I can tell you, I think I was just saying, there's been a lot of damage in these like leading software companies and leading like cyber security companies. Like if you look at another one, this CrowdStrike has just been really bleeding down from 520 all the way to 423 now, or some of the other
I was
smaller
going to say
ones in the space.
software names in general have been really beaten up lately.
Yeah.
Palo Alto being software, but also cybersecurity, really focused in that part of the software space. But
yeah. So I don't have a strong take for you on this one. It will be interesting to see, because the thing about this earnings season that we are working our way through is it has been marked by companies doing pretty well on their reports compared to expectations, and then not trading well. And I think that's primarily due to the fact that so many of those names are up so much into their reports. Like if you look at, I think like an AMD is a great example. And I know it's a little bit higher now, but AMD's earnings report was just fine. It was a good report. You can't really comb through that AMD report and find anything bad about it, but they immediately sold it down on that report. And that's been very, very commonplace this earnings season. Reporting in line has led to sell-offs. Small beats have led to sell-offs. And if you miss, which very few companies have missed because expectations were so low going into these earnings reports, if you miss, it's a real disaster. There's a lot of chatter in the financial media space about the percentage of companies that have been beating earnings this season, and it has been historic. It's like one of the biggest percentages of beats in 25 years, outside of like coming out of a couple like COVID, coming out of like a couple really crazy things like again like COVID. One of the best earnings seasons in terms of beats ever. But most of those earnings expectations were put on for these companies in like late March and April. So, expectations at that point were so low. And then these analysts never really revised them higher as the story changed here and as the market really, really went up. So, you have a lot of beats, but you don't have a lot of good reactions. And to me, I find it interesting. The financial media has been so focused on just how many beats we have. I think that the most important statistic to look at, and I actually haven't, I usually see the statistic pop up somewhere every earnings season. I actually have not seen it pop up this earnings season, but the statistics that I really like to pay attention to aren't just like what percentage of companies are beating. I like to see what has been the average move of companies that are beating versus companies that are in line versus companies that are missing, because I think that tells a story more than just the, beating on your top line numbers. And while I haven't actually seen those statistics this earnings season for whatever reason, usually they're pretty prominent. I could just tell you anecdotally by looking at it, the reactions to beats this earnings season have not been great. It's almost like the market's been in such an incredible rally mode. Some stocks have been in such incredible rally mode. The best way to end a rally is to have them report earnings. The only exceptions to that have really been Meta, Microsoft, and Palantir that I can think of. And even since then, Microsoft has kind of become a little bit of a dud here, and it's filling its earnings gap even right now, and that was a phenomenal earnings. That wasn't a phenomenal report. That was a phenomenal earnings report, and here we are a few weeks later, and they're starting to sell it down. Meta was also one of the best, biggest beats I've ever seen, and this is still holding up, but it's not like Meta accelerated higher after an incredible report, like it did on its last earnings report, which I can't remember when that was, but I know it accelerated. I don't remember if it was this gap and go here or if it was like this gap and go here. But it really continued. And then the other one that beat by a hefty margin, though it's an extraordinarily expensive stock, is Palantir. Those are the only ones that have been able to hold up. And even as Palantir, as we're chatting, is almost back to where it started after the initial gap up post report. So, phenomenal earnings season in terms of companies that have beaten. The reactions have not been great. But then to circle back to Palo Alto, which is the company that you mentioned, and why we even started discussing this, almost all those companies I'm mentioning, they were trading great into the reports. This one's not. So it'll be interesting to see if it's the same story here. Is like an inline report or a little bit of a beat on a report going to sell PanW down in the same way that it sold AMD down? Or because this thing is already trading $35 off of its recent high at the end of July, will they be a little bit more forgiving on like an inline or a slight beat report? We'll find out soon.
All right. The other earnings this week are the retail sector. Home Depot tomorrow morning, TJX Wednesday morning with Lowe's and Target, and then Walmart. I think Walmart being the big one of the week for sure, with the current economic backdrop that we're in, especially after a CPI and a PPI last week. We want to know what consumers are doing, and a good way to know how consumers are spending is to look at retail earnings, but not just retail earnings. I think a definitely really important part of this week's earnings reports is the forecast and what they're expecting. And when it comes to tariffs and prices and inflation and spending, et cetera, et cetera, et cetera. So which of these reports are you focused on when it comes to the retail sector this week?
Yeah, all of those. Home Depot, Walmart, Target. I'm really interested in seeing those reports. I think we're through something like 85 or 90% of companies at this point for earnings season, but we still have some of the most interesting ones to report. Which are
NVIDIA's
these
next week, so we'll talk about it next Monday.
retail names. Nvidia and Broadcom are what we still have in front of us, and they're all going to be Nvidia and Avago. I still call it Avago a lot of the times. Broadcom being like two of the most important companies for the entire marketplace. But these retail names are really important because, like you said, we'll get a look at what the consumer is doing. But I'm even more interested in what they say about what they're planning on doing in terms of price increases or lack thereof related to tariffs. That has been like the biggest thing that I've been paying attention to in this earnings season. Like I think we talked about it on your show when Procter and Gamble reported that they said that they're going to be increasing prices on 50% of their products, like starting in July or August or something like that. So like to me, that was really interesting. What kind of language are we going to get from Walmart, Target, Home Depot in terms of what they're doing in terms of price increases and also the timing of those price increases? Because what we've really seen on the impact of tariffs on price increases is so far a very slow bleed into raising those prices, getting through the uncertainty. A lot of these companies also did a fantastic job just like front loading on their products, knowing that the tariffs were going to hit before they actually did. So yeah, I mean, we'll see. Really important stuff.
Sorry, had myself muted. Yes, I think definitely like with the backdrop that we're in, these retail earnings, sometimes they can be a little bit like a snooze fest, and the market doesn't really care. Um, but like tariff backdrop, inflation backdrop, I think these earnings definitely matter this week. All right, we talked Fed a little bit, but let's go back to the Fed a little more. The Jackson Hole Symposium is on Friday, or sorry, the Fed chair's speech at the Jackson Hole Symposium is on Friday. Since that PPI last week, the market has pared back some of the expectations for rate cuts this year. We were talking, the market, there was chatter, and from Fed officials also, about a 50 basis point rate cut at the September meeting being possibly a good move. Now we're paring back expectations even for a 25 basis point cut. I think right now it's 83% betting on a 25 basis point cut, 17% saying might keep rates unchanged. Uh, the chatter was, 3 rate cuts now this year. Now it's looking more like 2 again. Do you think there's 2 releases happen, or we get the Fed minutes on Wednesday and then the Fed chair's speech on Friday. The Fed minutes are important for the market to be able to get a closer look at the committee-wide discussion about rates, because as we've talked about before, it's a committee, it's not just one person making decisions, so the input from each individual matters. But the market moving event usually for the Fed is anytime the chairman speaks, and they kind of take that as Bible. Whatever he says is what goes. Do the minutes matter more, or the Fed chair speech on Friday?
The Fed, I think the Fed chair speech on well, the minutes are going to be interesting because we've never really seen people on the committee dissent before, like
Right.
they did on that last
Mhm.
one. So it'll be interesting to kind of get a little deeper of a view on that. But I think that Jerome Powell is going to be really interesting on Friday. So typically, Jackson Hole is kind of a non-event for the market in most years. Like it's interesting. We'll probably move around a little bit on that day. But most years, I think what he just reiterates is exactly what he had already said in the last major Fed meeting and press conference and announcement, and you don't get anything new. The one big exception to that was in 2022.
Mhm.
2022, Powell came out and shocked the market with his degree of hawkishness and absolutely crushed the stock market. Like absolutely crushed it. It was that might have been the biggest movement on a Jackson Hole event ever in my 15-year trading career. And this is an interesting one because there's a lot of uncertainty around it, like you were just describing. Last week, they were pricing in like a 95% chance of a cut in September. Now, post CPI and PPI, it's down to 83, 85%, like you were just saying, which still sounds like they're probably going to cut. Usually, I never thought a 50 basis point cut was ever going to happen. We'll see what he says. When you are pricing in, an 85% probability of a cut, if you were to come out and say something that dramatically reduces that probability of a cut, you could see the market have a huge movement on it. If I'm not saying this is going to happen, but if Powell points to PPI and CPI and says, "Wow, this is really a reason why we need to be cautious," you could see the market get absolutely destroyed on it. Um, I've been in the camp that he's probably going to be doing this cut for a while, but that could change pretty quickly. He has said, and I just want to return to what he said, I think 2 Fed meetings ago, that in a stagflationary environment, in an environment where prices are moving higher while growth is slowing, which by the way, that's exactly what tariffs create. Um, they view the price stability side of the mandate as more important than the employment side. Jerome Powell views that you cannot have steady employment if you don't have price stability first. So it seems to me, and that was new to me. And so it seems to me like that is actually kind of the number one thing for the market. So when you look at that CPI number where inflation is upticking, even though it's in line, uh, maybe we're getting like a 2.72% annualized rate of inflation, which is not terrible, but it is above their target of 2. And then you get that PPI number, which could imply that this is just the beginning and that it's going to increase further. Do you really want to risk a Fed cut right now? What a Fed cut does is it stimulates growth by stimulating inflation in a lot of ways. And if you go back to like the 2010s, when we were struggling to stay at 2%, we kept coming below 2%. It made so much sense to do QE and have interest rates at zero. But when you're at a number that's above the Fed's mandate with these potential implications that it's going to increase, are you going to cut into that and potentially trigger a inflationary spiral by cutting rates at that point? I don't. It's very tricky. I wouldn't want to be Jerome Powell right now. He's stuck on between a rock and a hard place, and there's only so much that he can actually do. But I really don't know what's going to happen on Friday, to be honest. Like I said, I had been in the camp that this 25 basis point cut was coming in September, kind of until I saw that PPI number hit, and I was like, whoa. And that's right after we saw the ISM number, which was stagflationary in nature, and that's right after we had the bad jobs number, but it was followed by the CPI print, which was in line, but still showed an increase in costs. So I won't be surprised if the market gets a shock here, but I also won't be surprised if the status quo stays the status quo. It's going to be a really interesting one.
Is it hard for you on a week like this where, I mean, we are getting lots of catalysts heading into Friday, but it's like the big event is on Friday at 10 a.m. Eastern time. And, you could be thinking the market's going one direction and then it just gets blown up on Friday. Is it hard for you to really get into like longer term positions or swings on a week like this when you have to wait till Friday to really see what's going to happen?
Well, I mean, welcome to the Trump presidency is what I would say to you on that. It was the
True.
same thing
You could
in
blow
Trump
up anything in
1.0.
any tweet.
Yeah, anything and
True.
anything at any
Yeah.
time. It was the same
Yeah.
way in Trump 1.0, and Trump 2.0 has been like that, but even more so.
Yeah.
At any time, he could come out and say something that sinks the market or rips the market higher. He does both, and you never know exactly when he decides to get online and start tweeting, and you never know what he's going to say, and you never know what the reaction is going to be, and all of a sudden you can get hurt in your swing positions when they're looking good. And it's important just to always have a game plan in place for risk management. You never know what's going to happen, and I view that as outside of my control. And like I said, sometimes Trump says things that moves the market in my favor for my positions. Sometimes he says things that moves the market against me for my positions. So it's almost like I don't want to say a coin toss, because I don't like equating things to a mode of gambling where I don't actually have an edge. I would say that I still do have an edge, but when it comes to binary events that could move the market, whether it's Jerome Powell or Trump coming out and saying anything, I'd like to think that for every time a random event happens that moves positions against me, that a random event happens that moves positions in my favor. I can tell you from a trading psychology perspective, and I am definitely subject to this also. I think we all feel this way. All traders, I think, feel this way. It seems like whenever a random event happens, it always feels like the positions are moving against you. And that's because when the positions move in your favor, it seems like, well, it's just like, I'm happy, I'm making money, and that's just how it's supposed to be. And you just notice it and feel it so much more when an event happens that moves the positions against you and triggers stop losses and things like that. So I think from a psychology perspective, we always think that all these events go against us every time. In actuality, it's he could say something now that could move my positions in my favor. He could say something now that moves them against me. I've been on both sides of that coin.
All right. So here on Monday, if you have any charts that are ideas you like that we could go through. You're muted. I don't know if I can unmute you. Nope. Derrick, you're muted.
My
There we
bad.
go.
So
I couldn't unmute you, so I had to get you to do it.
and
Okay.
I was just fixing some positions anyway, so nobody missed
No, you're
anything.
good. You're good.
But yeah, so I still have the screen share up right now. I started like 4 new positions today. Depending on where they close is whether or not I'm going to swing them. I started a Reddit short today. I, I think that this thing could pull back to at least the 80 EMA, if not probably the midpoint between the 8 and 21 EMA. especially if there's any broad market help. I am a big bull on Reddit. I really am. I've been a big bull on Reddit since the beginning, since the IPO. I think that this company has so much potential to grow. This move in August is getting silly. What is it? 1, 2, 3, 4. I guess took one little rest there. 1, 2, 3, 4, 5, 6. So 4 days, 1 day of rest, 6 days higher. It's been like 11 days straight up action in Reddit that hasn't even touched the ADMA on the daily. Phenomenal company. This move is getting silly. We called out for a short on it in the morning meeting. I like that pullback. I wouldn't necessarily short 140, 170 where it's trading right now, but I think that traders could have this on the radar if they're not already in it for that short for good execution possibility to be able to capture that pullback. The other one we spoke about it already was Microsoft short through 520. That was a trade that was on my radar today. I entered that as a new trade, break of support, already described. I did not like these consistent selling down, right back down every single time they've tried to uptick this over the course of the last 6 days. It just has not traded correctly. So that was a short. For NNE today as a new trade, but that one you probably missed. And then, NVIDIA is the one to watch, though. And this trade hasn't gone. It's a breakout above 183.50 to 184 on the upside. It's a breakdown. Really, I would try to pinpoint it at like 179.50 as a breakdown. The area is loose. It's loose between like 179 and 180. And again, on Friday, it briefly traded down to 178. So I think that you try to look for a short in NVIDIA somewhere between 179 and 180, with confirmation comes in if it gets below 178. You got a week and a half still till the earnings report, so I think that's enough time. But I think that NVIDIA, how it handles either the breakout or the breakdown on those levels I just mentioned, is a big thing that dictates what happens next for this market. The market is something that we're paying such close attention to in these areas. Like, I'm very, very cautiously a bear right now. I say cautiously because again, I'm fighting $5 to $6 billion a day of buybacks. There's a massive bid underneath this market that's coming from the corporations themselves. And you're fighting that if you're trying to be bearish. You have to be cautious in the face of that degree of buying. It really is massive. But if you somehow lose NVIDIA and then you somehow get the spies to lose that 636 to 640 area, you're probably setting up for a much wider breakdown at that point. I don't know if it needs Jackson Hole as a catalyst to be able to trigger that and overwhelm the buying that's coming from the corporates. But I'm really, really at a minimum not bullish right now, even though the technicals, the SPYs, Qs, and IWM look really bullish. If I had to be long anything, I would actually rather be long value. I'd rather be long some value names that might be small caps or mid caps. I would rather be long healthcare names, honestly, even though I have no positions in healthcare. I got some positions in a couple of energy stocks that I do view as value plays. That's stuff that I would rather be long right now than the super crowded NVIDIA, AMD, Palantir trades. But NVIDIA is the big one to pay attention to. I am short, even though it has not broken down through the level, and I've been eyeing really closely that 179 to 180 area as a spot to increase my sizing if it can properly trigger.
A question we just got from YouTube. Dan wants to know your thoughts on TLT.
Sure. So when it comes to a name PLT, when it comes to bonds, you want to know the outright levels. The outright levels are important, but it's also the speed of the movement on those names. So TLT, if it really starts getting below probably 83.50, really, I think that means that you're starting to have interest rates ballooning higher to a point where it could become a problem for the stock market. So I don't really trade bonds. I don't really trade the TLT, but I look at it every single day just because of its importance to the stock market. Below 83.50, I think you have a big problem just in terms of the outright rate that bonds are trading at. Above that, this has been very, very range bound, and a stable bond market makes it kind of a non-event. So TLT here, we had concerns in May, but June, July, August so far, it's been all within this range, and there's no concerns to be had, except out of nowhere, and I made note of it in my morning meeting this morning. This is like a day 3 down here on this TLT. It's actually becoming like a pretty big 3-day move. If that continues or speeds up, it could become a problem for the stock market without even breaking the absolute 8350 level that I just discussed. So you want to pay attention to two things when you're looking at bonds. One is the absolute level in which interest rates are trading at, which could become a problem at a certain point, but also is the speed of change. The speed of change in either direction can have a destabilizing effect on the equity market. And right now, 3 down days in a row, we got to keep an eye on this to see if this continues into a day 4 or a day 5.
All right, Derrick. I'm going to let you go. Derrick is a real trader, and I know he definitely wants to get back to it. If you want Derrick's free ebook, you can go to t3live.com/DOLive. Like I mentioned at the beginning, Derrick is the head trader at T3 Trading Group, which is a prop trading firm. And his ebook is all about the benefits of prop trading, working with T3 Trading Group, and how you can do that and work with him. So again, t3live.com/DOLive to get that free ebook. Derrick, have a great rest of your Monday, a good trading week. Hope you get some good catalysts off some of these earnings reports and the Fed events for your portfolio. Have a good one.
Thanks a lot, Greta. I'll be seeing you soon.